$1 million. For decades, it was the magic number, the golden ticket, the I've made it moment. But in 2025, $1 million isn't the life-altering sum it used to be. In fact, depending on where you live and how your money is invested, that number can mean I'm set for life or I hope Social Security comes through. And this just isn't an American story. According to the UBS and Visual Capital, there are now over 60 million millionaires worldwide, nearly 24 million in the US, 6 million in China, and around 2 to 3 million each in France, Japan, and Germany. And so while $1 million sounds like the big milestone it used to be, it's becoming more and more common. And yet, somehow, it feels like fewer people feel wealthy. That's the paradox of 2025. More millionaires than ever, but also more people wondering why it doesn't feel like enough. And here's the kicker. The Federal Reserve says 12% of US households now have a net worth of over $1 million. It's still an achievement, but no longer an exclusive club. So let's break down what $1 million net worth really means today, what it can buy you, what it absolutely doesn't, and the number one mistake to avoid once you get there. Hi friends, welcome back. I'm Diane. I spent the last 15 years in finance and consulting, advising everyone from the World Bank to private equity firms. I've seen people with $1 million living like they're on selling sunset, and I've seen others with $1 million still budgeting their Starbucks orders. So today, we're gonna dive deep into the numbers, data, real examples, so you can walk away knowing what $1 million can really do for you and how to make it work harder. And if you're serious about getting there faster, you can book a free one-on-one clarity call with me in the description link in the box below. Net worth is simple math, assets minus liabilities. Assets are everything that you own that has value. Cash, investments, stocks, bonds, mutual funds, index funds, to real estate, businesses, other valuables, art, jewelry. Liabilities are what you owe. Mortgages, car loans, credit card balances, student loans, personal loans. If you own a home worth $800,000, have $300,000 in retirement accounts, but owe $100,000 in student loans, your net worth is $1 million. Here's the first reality check. $1 million in net worth does not mean $1 million in cash. The Spectrum Group reports that for the majority of US millionaires, less than 15% of their wealth is in liquid cash. The rest is tied up in assets that can't be quickly converted into spending money without selling something. According to the Federal Reserve's 2022 survey of consumer finances, 65% of US millionaire households have the majority of their net worth in primary residences and retirement accounts. The median millionaire household has only about $130,000 in cash or cash equivalents. So if you've been picturing yourself with $1 million checking account, that's not how it works. So what does $1 million buy you? Possibly a comfortable retirement in the right place. The 4% rule says that you can safely withdraw 4% of your portfolio annually in retirement without running out of money, based on historical data. But that's not a guarantee. That means $1 million nest egg generates about $40,000 a year. Add in Social Security, currently averaging about $23,000 per year per person in 2024, and a couple could roughly have about $85,000 to spend. That's solid. A comfortable retirement in places with moderate or low cost living. Think Iowa, South Carolina, or even abroad in Portugal or Costa Rica. According to Nimbo's cost of living data, $86,000 a year in Lisbon, Portugal is equivalent to making over $150,000 a year in New York City in terms of purchasing power. Now, with $1 million in net worth, you can weather financial storms better than most. You could even cover an extended job loss, pay for a child's education without loans, or invest in a business opportunity without wiping out your savings. The FINRA Investor Education Foundation found that people with higher net worth were 3 times more likely to experience financial distress during sudden income loss compared to those with low net worth. Now, money doesn't solve every problem, but it does remove many sources of stress. A Charles Schwab Modern Wealth survey found that people who identify as financially comfortable report 31% lower stress levels and significantly higher satisfaction in life. That's not just about buying things. It's about knowing you can handle the unexpected. Now, what does $1 million not buy? 1, a luxury lifestyle in high-cost cities. So if you live in San Francisco, New York, Los Angeles, $1 million net worth average can feel average. Zillow reports that the median home in San Francisco is $1.28 million. If your $1 million is tied up in one house, that's not cash you can spend on travel or early retirement. In fact, the cost of living index shows that if you live in Manhattan, you need about $2.4 million in net worth to have the same spending power as $1 million in North Carolina. Second, it doesn't guarantee financial freedom. $40,000 a year in investment withdrawals might not cover your current lifestyle, especially if you have expensive tastes, live in high-cost areas, or anticipate high healthcare costs. Fidelity estimates that the average 65-year-old couple will spend over $300,000 in healthcare in retirement years. And that doesn't include long-term care, which could easily go over $100,000 a year. Third is a free pass to stop planning. One of the biggest mistakes, hitting $1 million and thinking, I'm done. The market drops, inflation rises, life happens. $1 million today will not buy the same lifestyle 20 years from now. If inflation averages 3% annually, $1 million in today's dollar will be worth about $500,000 in 20 years. That's a huge haircut to your purchasing power. Now, there's a few reasons why $1 million feels smaller than before. This is where inflation sneaks in like the villain in every 80s action movie. According to the Bureau of Labor Statistics, $1 million in 1990 is worth about $2.3 million in today's dollar. That means today's millionaires have the purchasing power that yesterday's half-millionaires had. And people are living longer. Social Security Life Table shows that a 65-year-old woman today can expect to live to about age 86 and a 65-year-old man to age 83, meaning retirement years could last anywhere between 20 to 30 years. And that's a long time to stretch your money. So how do you make your $1 million work harder? First is keep assets liquid enough to use. A paid off house is great, but you also need assets that can generate cash flow, such as dividends, rental income, or side business profits. Second is to diversify your income streams. Multiple income sources reduce the risk of outliving your savings. That could mean index fund dividends, rental property, consulting, or part-time work, royalties from IP. And here's the thing, you want to keep growing if you can beyond the 1 million. Think of $1 million as a mile marker, 10, not the finish line. Vanguard's data shows that investors who keep contributing after hitting $1 million often double their wealth in 7 to 10 years simply by staying invested and adding to their portfolio during market dips. Now, here's something people don't talk about. Once you hit $1 million, your relationship with money changes. You stop asking, do I have enough? And start asking, am I using it well? Because the truth is, wealth isn't just about buying power. It's about time power. You can afford to say no to things that don't drain you. You can spend more time with your kids, take a slower morning walk, or finally start that side project you've been putting off. The biggest flex? Not worrying about every bill, but having clarity and choice over how you live your life. That's when money starts serving you, not the other way around. And all this concludes to my number 1 tip. Know your freedom number. $1 million is a nice round figure, but it might not be your number. Your freedom number is the amount of money you need to fund your life goals without the fear of running out. So for some, it's $800,000. For others, it's $3 million. The key is knowing your expenses, your lifestyle goals, and how much passive income you want to generate. If you want help in this area and find your personal rich number, you can book a session with me in the link in the description box below. We'll run the math together, stress test it, and make a plan to get you there. In the next decade, we'll see more millionaires than ever, but also a wider gap between those who are wealthy on paper and those who are financially free in practice. Why? Because the future of money is changing. Between AI-driven jobs, digital assets, and longer life expectancies, $1 million won't stretch the way it used to. The winners won't just be investors, they'll be planners. People who know their numbers, manage taxes smartly, and design life around freedom, not just net worth. So if you're building towards $1 million, think long-term. Invest in skills, systems, and strategies that make your money work harder than you do. So in 2025, the real flex isn't just hitting $1 million. It's being able to say, I have no high interest debt. My lifestyle is funded without financial anxiety. I have choices about how I spend my time. Money without freedom is just numbers on a screen. So yes, $1 million is still worth aiming for, but it's not the end of the road. It's the start of a new stage in the journey. So in your next step, find your freedom number, protect it from inflation, and build the systems to keep it growing. Friends, if you made it this far, thanks so much for watching. You can check out my next video over here. See you in the next one.